So, hello, and a massive hello to everybody. Hope everybody's having a great weekend. This is 50 pips, rocking and rolling here, 13th of Jan 2019. No trade calls, recommendations, responsible for their own stuff because we're here for educational purposes only. So, what's happening? What's happening as we go into this week? Well, I mean, it's going to be interesting, right? We're seeing a lot of chop in the markets, very low volume across the board, right? You know, Friday was lowest volume in the New York Stock Exchange since this year, essentially seen across the board. And the week should be interesting. We've got Draghi speaking on Tuesday, we've got Carney speaking on Wednesday, and we'll have Kuruda speaking on Thursday. We have that G20 meeting Thursday, Friday, and Tuesday, if it goes ahead, is that vote in the Parliament for Brexit. So we'll have to see what happens. Now, let's just look at the major markets because not an awful lot has changed and the dynamics are similar across the board. Now, I think the most interesting chart I would be watching, I'd say the chart of the week, is really the crude chart, right? We've been seeing that crude's been trading a lot with equities, and essentially this is our famous chart on the weekly, right? We discussed the fact that on the hold here, we would 45s basically. We wouldn't be surprised to see $5-10 to the upside or $5-10 to the downside, depending on what happened. But our key control level was this 200-week moving average, right? What we said was that really the path of least resistance after we started to see this basing, despite the fact that nobody has a crystal ball, of course, would be if we got a day close above the 45.70s, is to see price slowly come back to a little bit more neutral, or just a little bit of pressure off, some profit taking, and us to come back into this 200-week moving average. And this was going to be the pivotal level bull bear line, right? So you see on this move back up, this level is being defended from a weak close. And what I would say is here, as long as this area holds, right, we could easily see this move down in extensions very aggressively. If it breaks higher, then don't be surprised to see this pop all the way back towards that 60, 62 as you see this 50 moving average coming back into that level. I mean, some people are going to prefer to look at it instead of looking at the moving averages, are going to be more partial to looking at this with the fibs. But you see that broadly speaking, the zones are the same, right? A move down from A to B, and the 50 back, you see this 50 back to 61.8 zone is in line with the 50 moving average and the 100 moving average. So that's really the zone most people will be looking at. Now, why do I think this is so important? Because I think here, if you can get that squeeze going, right, especially if you're looking at equities, you'd expect this risk on to trade across the board and those equities to rip that ES to take out that 2600. And that squeeze, this move here all the way back into this zone, and we'll look at it on the ES, could come very, very quickly. Now, if crude loses it and we start pressing back lower early in the week, then likely that's the time to try and press the shorts on the equities. Now, if it sells off, do we see this necessarily being a complete crumble? Not really. We see this as being an extremely choppy area. So this could also just be a little bit of a corrective move back down to then rip higher, right? So the question is what to expect. Well, I think here, as long as we flip it on the daily is the easiest way to look at it. That's the way we're going to be looking at it, right? As long as this area holds and you see you continue to get daily closes below that 200, the 50 DMA, the 200 weekly moving average, the 50 DMA, then I would suspect that those 45s are going to come back. We'll see a little bit of a retracement. If not, if we get the daily closes above here, then I'd expect that to come into play. So essentially, the two moves we're looking at is this move down from A to B, and then on the other hand, the move here from A to B, right? And the big question is this in the cards or is this in the cards? I don't think it's clear enough to go to have an assumption on the big picture structural move. I think it makes sense to look at it in terms of smaller zones, right? And I think what's interesting is that as long as we don't get daily closes above this, we'll be playing for a move back to the 45s. And if we get daily closes above this and a break here, right, this area, we'll be playing for the move back into the 62s. So I think essentially, as you see here, you've got about on back below, let me just clear this up, back below here, you got about $6 to the downside. And if we clear here, right, you got about $6-7 to the upside. So here the priority is probably going to be to look to try and see which side gets more traction. But I think what's interesting about this zone is that in both instances, there's a chance to try and play for the $6 to the upside or for the $6 to the downside inside this area, structuring the trade with a $1 stop, depending on the action. So that's why this is going to be very interesting for us this week. So it should be an interesting zone. Now, how does that translate to, and again, sorry to labor it too much, it's just, but I think it's an interesting discussion. Now, what about the ES? Well, the ES here, we've moved right back up, and we said there's two big zones where you'd expect it to try, the shorts to try and step in, and one was at the 50, 25, 30s pretty much, and then it's this 2600 zone, right? Now, you see the way this is being trading, if you flip over to the daily, well, essentially, or even look at a 1 hour chart, we've just been here stuck, and this 2600 is being protected. Now, what's going to happen? Really, as always, anything can happen, but usually if these big levels are going to see a sharp reaction, you tend to see the reaction quickly. When you start having double, triple, quadruple tests, usually what that means is that we're starting to coil, and that even if we're going to go lower, we usually have to go lower from a higher level after breaking that zone. The only thing that could kind of surprise a little bit in this kind of action is if you get something on the wires, right? If you get a headline where the market reacts negatively because this is coiling to break higher, then the reaction could be very, very aggressive to the downside. If not, your base case expectation would have to be that all this is going to try and probe higher, and that's where it gets interesting, because on a move above and hold where it attracts new buyers, then you can play some kind of Momo to the upside. If you get a move above and then it fails, then you know it's time to try and play the downside. So bar any kind of headline, most likely, whether you're looking for an aggressive long or an aggressive short, that will probably come when it pokes its head above that zone, right? But essentially, if you're looking at it in the bigger picture here, still there's an awful lot of overhead resistance. Our base case is still that we're in a bear market, that this is a corrective rally no matter how aggressive the rally is. Our base case is still that, you know, this volume is far from spectacular, and we think we're going to give back most of this very, very aggressively. And so going into the week, we're looking at this 27 to 2600 as an area to build swing shorts for a bigger retest lower. We'll have to see what we get. At what point is our conviction of the bear trade and this move down severely put into question is if we get at any point this week daily closes or a week close above the 27, then we'll update our view. If not, there's going to be no big reason to update our view or our thinking. Dollar index, our base case was, again, if you've been following it, no big surprise, we've been shorting these moves lower, and we've been looking for a correction back down, so we can't complain here. Our base case has been that we're looking for this to come all the way back down into the 50. We think this is a very, very choppy area, but our base case is still that we have to correct a little bit lower, and then we'll see. So if I drag this a little bit to the left, you can see this. So still, we think there's a little bit more coming to the downside, and then here it will get interesting to see how the market reacts. Is this going to be an area to try and play the long side for a counter trend long, or just for a proper long? Or are we going to completely break down? But for now, we're still looking for more downside. When does this whole sideways heavy consolidation change for us? Daily or weekly closes above the 98. If not, our base case is still going to be that we have to probe towards this 50 and ideally back into the 92.60s. What else have we got in terms of major markets? Well, we've got ZBs. ZB structurally, you know, this is another key piece of the puzzle, but it's holding that downside channel quite nicely. And remember what we said, this was a huge level, 145.29s, 145.30s, 146, whatever you want to call it, right? It's 3 ticks. As long as the market can't get a day close back above, expect it to try and trade a little bit heavy in a corrective fashion. This zone is so important. We can't stress how important this is. If you start to see the market trade above here and close comfortably from a daily close, right? Previous support acting as resistance, then we think the spike higher to 155s or 160s could be fairly brutal and aggressive, right? But for now, we still think that in any case, the way this is trading, any kind of corrective move is likely going to be just corrective for ultimately a retest higher. And on gold, let's see if we can load the gold chart. Again, our base case was, as always, we look for those longs into the last Fed meeting of the year, into the positive seasonality. So this trade's worked out quite nicely. Our base case here is that the quick pips are done, right? And that here, the healthiest move would be to see a little bit of a retracement back here, all the way into the 1260, 1250. And then if this is going to rally hard, that's most likely where it'll try and rally from, not straight here in a straight line unless a headline hits. Now, the big question here is, don't forget to keep an eye on USD-CNH, right? But if we ever get any day an aggressive close below here, the 12, call it the 1250 as a line in the sand, we would not be surprised to see this move in an ugly fashion all the way back into the 1200s. So we'd be very cautious if it starts to break down. It's not something we would want to step in front of. So that's pretty much where we're trading. Those are the key things going into the week. In terms of some of the swings we have on, no big change, right? We looked at these, actually I think we have it here. Let's see if I can load it. Let's see if we can load the yen. So we were short yen, you know, on the puke, on that flash crash. We flat out all those positions. We got hit on all our TPs. And our base case here was on that retest, that this was offering a nice opportunity to get back short for a move back into this wick. So these trades are still in play, right? We covered half of the position, so we're holding half. And here I think it's going to be extremely important to see how we trade at the beginning of the week. So, right, you see we've got this little move here, A to B, coming back in, and you've got the confluence with this moving average here on the 4-hour chart, and you know, the 68 whole 78 zone is coming in nice, protecting this level. So really, this could be very, very choppy, but unless the market doesn't regain these highs and clip these stops, at which we would not be surprised to see that 110 come in aggressive fashion. And then, you know, we'd be flat on that and look to re-enter shorts higher. But right now, as long as this holds, this is still a very, very interesting support zone, and we think the risk reward is still extremely interesting to hold partials for the move down. And on the other hand, this is the trade we've been working and holding all the way since before the into that FOMC meeting on euro. If we can see if I can find the chart where it's hiding. It's probably somewhere. There it is. Again, this whole trade off the 113 here, we're flat, vast majority of the position here, and looking for all these dips to being potential re-entries, right? So you've got first 1450s, first interesting zone. If it can't hold here, then we wouldn't be surprised to see it all the way back into the 1370s, but we're still looking at this as a move higher. And remember, nothing goes in a straight line, right? So here, this is a very nice development, and even a move back down into these lows would be very, very healthy move to get back in and continue to work that position to ultimately get the final move back towards the 200 and possibly back into the original target, which is the 118, okay? So that's pretty much where we are. Let's see what we get. A lot of stuff going on. Interesting trading conditions. Fairly frustrating on a lot of cases, right? Simply because we haven't had that much opportunity. The swings have been working, but we haven't had that much opportunity across the board. But that's, again, we don't get to choose what hand we're dealt. So let's see what happens there. And let's just see if I can load this. Don't forget to keep an eye on that USD CNH, right? This is going to be key. Because here we're looking for this to come all the way back down. We had all the back into the bottom end of this channel. And now, surprise, surprise, as we've said, right, the PBOC doesn't want it ripping those highs, but really they're not too comfortable with it outside of the channel. And you saw on Friday, you started to get comments on the wires of them talking about excessive strength of the currency, and you see it start to pop back up. So this is really a key tell. This is really a key tell, for all those discussions and all those trades we've been looking at on gold too. So watch how this behaves. This is going to be an extremely important bull bear line, and this move, right, essentially is going to translate to that corrective move on the dollar we've been discussing, right? So let's see what happens. It's a key battleground. Keep an eye on this. You want to keep an eye on that chart, okay? Have an awesome one. Talk to you guys soon. Take care. Bye-bye.